Hi everyone, this is Brian Neal with Tradetobefree.com, and today I want to look at some of the trading setups that I'm looking at for the coming day here. And the first thing I want to do is look over MPW, because that was the one trade, bottoming trade that I got into yesterday. And yet in the last video I talked about the fact that, hey, if it came back to the entry point, I'd probably cut it. And with the healthcare repeal and replace or repeal, or it's unclear right now what's going to happen with that. So given that this is a healthcare REIT, I wasn't sure if this would follow through or not. And plus, it's below $20, so I'm not real excited. If it's below $20 and if it gets off to a great start, that's wonderful. I'll take some off, maybe add some more on the first pullback if it happens before 11 a.m. and we get a good move, a secondary move starting, then I'll go ahead and add to that. But I didn't see that yesterday in MPW. So what I did was I just took it off later in the morning. It only went up like 1%. But, you could have held it and, dropped a stop loss 3.5% below the entry point. That's the optimal stop loss point on that pattern that I found in my back testing and research. And this morning it's gapping higher, so it looks like it wants to go to 1355, 1360 and make that 4 or 5% move that I was looking for yesterday. So that may go ahead and follow through and hit that target today or tomorrow, although it may come back and fill this gap right now because I don't know if there's any earnings news on it or any other news on the stock this morning. I don't see anything, so it could come back and fill that gap, and then from there it may go ahead and hit the target. So anyway, the pattern's still working, and again, I just wasn't real excited about that trade, so I took a small profit and actually sold it at like 1309, I think, just because I was pulling back and didn't make a really good first move and was below $20. So the other one that we were looking at yesterday was COHU, and we talked about that before. That didn't hit the entry point. I'm going to talk about that in a second here, but I also want to show you Netflix, because I think for some people this may be a trade they took out of the newsletter back in March. We had this feature back in March, on March 20th, and it was breaking out a flat base pattern. Generally, we take the stock off ahead of the earnings release, but with Netflix, they tend to beat by a fairly wide margin. I'm going to go ahead and change this so you can see a little bit better. Change it to 1280. See if that helps. Yeah, I can see a little bit better now. So we had it featured here in March, breaking out a flat base. Pulled back. It held above the stop loss point. Went through earnings and so forth. Because it tends to beat, or has been beating, on the bottom line over the past few quarters. I think this is as of January or February when I first featured it in December over the past several months. You could have held it through earnings. You could have justified that. I think the target was like 174 on this, and I gapped over the target on Tuesday. But usually before earnings, I'll take it off. One thing to note about this stock too is that right before this most recent earnings report, it did break out of this double bottom pattern on really strong volume. So the day before, or the day of the release, before the release was made, it broke out with strong volume out of the double bottom pattern, and that's what you want to see in this pattern. When you see this W formation here, you want to see it go above the center point in the pattern with a lot of volume, and actually did that right before the earnings release. So you could have gotten aggressive and played that breakout, and from there it actually took off, and it's up 10-15% yesterday. And then now if it breaks above this high here, I might take a day trade on that or hold it for a couple of days if it continues to make higher lows and higher highs. It's not a real exciting trade for me, so I'll probably just skip that. But we have an earnings play potential. This stock here, I'm going to get the ticker symbol again. I'll bring it up so you can see it. EXPO, they beat by a pretty good margin on the bottom line. I don't know if they beat on the top line or not. I forgot now, but anyway, the stock is really thinly traded. I think it averages less than 200,000 shares per day, You can see pre-market, we don't really have a good pattern here to trade off of, so that earnings eruptions play, I probably wouldn't use that today. Now it may, break that pre-market high and move a lot higher. If you want to play that, you're going to have to play with probably a wider stop. Usually I play that trade with a real tight 2.5% stop loss, and it's in the first quarter earnings season that was 90% reliable if it satisfied all the criteria, of course, but the stock doesn't. The stock has, just very thinly traded, and you can see right here that pre-market, it just doesn't have a clear pattern and enough volume to really use technical analysis with as much reliability. So on this trade, I'd probably skip that. But I've tried to find some bottoming trades last night and this morning. I didn't find any that really looked that good. But I also want to show you, though, COHU here, pre-market. I'm going to change this so you can see the Bollinger Bands on this. But this is getting back to the principle or the concept I was talking about before in prior videos, and that's these Bollinger Bands. There's a lot of information online about Bollinger Bands, but one of the things that's not really mentioned in those other videos is this behavior on stocks with really rapidly improving fundamentals. When they start getting above the Bollinger Band, a lot of people look at this and say, oh, it closed above the Bollinger Band. That means it's going to pull back, and actually what I found is that during these times when you've got a catalyst or these rapidly improving fundamentals and the stock starts to close above the Bollinger Band and find support at the top Bollinger Band, which is this line right here, when it starts finding support there, okay, and then it breaks the daily candle, it sometimes or oftentimes makes a nice move within a day or two or three. And that's set up here with COHU. They beat by a really wide margin last week on sales and earnings, and it kind of flies under the radar a little bit. It only trades, probably averaged 250, 300,000 shares recently. So a lot of people probably wouldn't, notice this, but the fundamentals are rapidly improving on this, and finding support at that top Bollinger Band and then breaking that prior candle sometimes really sends it a lot higher. You can see that here where it closed above the Bollinger Band and then broke that daily candle and then took off and went up, 10% or so within a couple days. Over here, it did the same thing. And I showed you that on a couple other stocks the other day too. So that's a common behavior. When you've got these rapidly improving fundamentals and you've got, finding support at the top of the Bollinger Band and then, that bullish pattern, that bullish candlestick pattern. So that's one to watch. And 1975 is a point where I might jump in on that today.